Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It's Macro Monday. Let's take a look at some legacy charts. There were quite a few legacy charts from the stream on Thursday that I didn't get a chance to look at, so I will bring those up today for the video. It is quite the hodgepodge cornucopia potpourri, so get ready for that. But on the digital asset side, we did have a weekly record. This is mainly BTC and ETH from the US, but a record nonetheless. 4.39 billion in global inflows. Huge. We can look at this again. Most of this BlackRock, most of this Bitcoin and ETH, most of this in the United States. So there's clearly still an appetite on the ETF side of things. You know, ETFs aren't a use case, but they do help bring capital when there is momentum and are a massive unlock for cryptocurrencies, which to this day still have some difficulty on-ramping people and getting people comfortable with using centralized exchanges on the crypto side. Still not seeing too much froth, honestly, and NYDIG agrees with me. If we look at funding, we look at basis, we look at OI, you can look at all sorts of market dynamics. This is funding, and you can see where it got in 2021, where it got in even 2024. And one thing that keeps coming up in my mind is, okay, are we going to see volatility ever again like it was even in 2020 or prior, just because we have so many vol dampeners now. We have all the options, we have all of the different products available, all the different ETFs, covered calls, that sort of things that help dampen the volatility. Either way, this is not, if you're looking at this blind, not looking at price, and you're just seeing the perp funding, you're going to say, well, this is nothing, right? This is a bull market? No, that's not what you're going to say. At least not based on what we've seen. CME futures basis also quiet, tame, unimpressed at around 8%. And yeah, there's a lot of basis trading that's going to bring that lower and tamp that down. And as that goes higher, you're going to see more basis trading, more ARB trading. But even still, we're not seeing basis get out of control here at all. And it's still lower than it was at any point in 2024, which is pretty wild. We still have the large 80,000 BTC whale moving coins from their wallet to Galaxy. I think that's done at this point. What is actively happening is Galaxy moving these coins out to exchanges. I don't have an exact number as far as the percentage that has been sold, but it's still definitely happening. And 80,000 BTC is a lot of coin to get unloaded. But the good news is we have ETFs, right? The flows are here. We have the flows to absorb this. MSTR bought 740 million in BTC last week, and a bunch of other treasury companies also bought. So if there's ever a time to unload this, this isn't like the Germany situation where it's just slop and chop. We actually have very strong buying on the exchange side. Looking at events for the week, not too much going on. PMI, which not that important to me. This Powell testimony, or not testimony, but remarks at a banking conference may be a big deal, but I doubt it. Really, it's next week. We have earnings this week and next week. We've got ADP, GDP, PCE. We've got a quarterly refunding announcement. We've got more employment data next week, and we have FOMC. So we have a lot of stuff next week that could bring volatility in either direction. And we may be seeing people sort of pre-positioning around that now. Not necessarily for any one of these events, but it's just the amount of stuff coming at us, just a wall of information where leading into these events, these micro events, there's some amount of certainty. And then after the event, there's less certainty. And so maybe post-event prices will do better. But at that point, we're into August already, and seasonality is not great for August. So I'd be careful on the leverage this week and next week, just because of all the stuff coming our way data-wise. GDP should be fine. We're not in a recession. I don't know who needs to hear this, but based on the NBER definition, we do not have back-to-back negative quarters of GDP. Even when we did, they didn't declare a recession. So it's going to take a lot more than that when GDP is positive. Also, the SPY is at an all-time high. So it's going to be hard to get a recession when the markets aren't crashing. Here's a FedWatch tool, basically a 0% chance of cuts or hikes this upcoming meeting, kind of 50-50 for September, but a lot can happen between now and September. There's Jackson Hole in August, and then maybe one more cut in December, and that's it for the year. And then the market starts pricing in life after Powell. His term ends in May, potentially before, if they sack him on the government front. We'll see. They certainly want him gone, but he remains steadfast and doesn't appear to be leaving anytime soon. Inflation's been pretty volatile, up and down here between 1.6 and 2.5, and you're seeing that on CPI and PCE and core as well, sitting at 2.05 today. So based on this, yes, rates should come down, but the Fed's worried about tariff-related inflation, which TBD, we haven't really seen so far. We are starting to see some of these numbers creep up. We'll get a PCE number next week, but month over month, we're 21 days into July now. 2.7 on CPI was last month, so this is barely a move, and PCE is flat, essentially. So that's a very good sign for rates coming down later in the year into Q4. Maybe that's what helps fuel continued rallies for everything. But up until that point, maybe there's a little more uncertainty. It's a little more wishy-washy on what's exactly going to happen here. Energy, gas prices basically flatlining, just doing nothing since the beginning of the year. So that's huge relative to the past 3 years. Great news for people who spend a lot of money on gas. We are seeing fertilizer start to creep up. I like to look at these ancillary things, not because they help make trading decisions. It's just trying to understand the inputs of inflation. When we're seeing beef prices go to all-time highs and there's this fly problem and, there's this, right? Food prices may continually slowly creep up here, but, this is going up, not down, going in the wrong direction. On the fertilizer index, used car index, this gets a lot of consternation that I see on Twitter anyway, and I don't really see this going anywhere. It's gone from 200 in January 2024 to 207 today. Not much movement relative to where it was and where it's been. So yes, are used car prices ridiculous? Probably, but you're not seeing it on the index. And again, just another component of inflation worth monitoring every now and again. Yield curve continues to normalize there on the 10-2. The unemployment just, again, historically low. Kind of between a rock and a hard place here if you're the Fed looking for data. Inflation is lower, coming down closer to the target, but unemployment is still fine based on the number. Again, we can debate whether or not the number's real, just like we did for the Biden administration, but the number is the number. And if that is an important input in making a rates decision, it is too low. Looking at the bond complex, some of this stuff starting to maybe look a little better. This is 3-day charts, so it's going to take, probably 2 months for any of this to actually materialize. TLT continues to look god-awful to me. AG and IEF looking mild, mid. What do the kids say, right? It's not going to take much just because these have been consolidating for so long. It's not going to take much for them to see breakout conditions, as we'll see with a lot of these random charts that I have today. There are some charts that look like this, where you'd say, okay, maybe it's hit some alerts at a new higher high. For instance, on AG, if AG gets to like 100, 105, maybe that's worth a position, right? And what that means sentiment-wise is people are moving into risk-off mode. So just something to continue to monitor to see where the market's head is at. But nothing screaming to me anyway on technicals that we should be turbo long. Yesterday I commented that based on positioning, NASDAQ's going to have a harder time going higher. Down here is the COT data, and this is not positioning that's favorable for continuation. So someone in the comments was saying, based on my assessment, then Bitcoin's also going to have a hard time because Bitcoin follows NASDAQ. I don't think that's necessarily incorrect. Both of these can be bullish regardless of positioning. Bitcoin has much better looking positioning on COT data. It has flipped positioning. It has commercials very long, large speculators very short. But on the relative value conversation is really where you're going to see the most impact. And we're already seeing that with NASDAQ, Mag 7 versus the rest of the market, S&P 493, Bitcoin versus the rest of the market. The rest of the market's going to have an easier time going up just because it's been undervalued on a relative basis for so long. So I think everything can do well, but that's not really the question. The question is based on what? What's your benchmark relative to what in what time frame? If we see tech continue to rise 0.25% every week, yes, it's going up, but is Opendoor going up 90% in a day? Yeah, right. So like, risk adjusted return, yada, yada, yada. But it just depends on what's worth it on a relative value basis. And the same can be said for Sol relative to ETH, which I'll get to in a second. Just looking at BTC, this is the 4th consecutive red daily candle, most likely to close here in the next couple hours. I don't like how close we are to this trailing stop loss. For me, if we close anywhere near 116, 115, then I'm out of any leverage positions on BTC. Certainly out of leveraged MSTR positions as well down there. You don't want to be in leverage from 117 to 110 is my guess. I don't think we go lower than 110, but that's not the point. The point is, if the trailing stop loss says to get out at 116 and we're at 110 and we continue to go lower, it's like, well, I wasn't listening to my system and it's my own fault. So that just kind of is what it is. And it also depends on that large seller. If we go to 116 and the large seller is still selling, I'm not really concerned. But if we go to 115 and the large seller is done, then I start to get more concerned. So it kind of depends on what's going on in the broader market, but not a good look on the 4 hour, on the daily, on the weekly. And we can pause, we can reconsolidate. This isn't like over. It's just difficult because you get these fits and starts and not a smooth multi-week trend. Here's a look at ETH BTC. It is approaching its TA target based on nothing else, not based on treasury companies, not based on ETH staking and ETFs, whatever, right? We're just talking about technicals here. Somewhere between the high 03 zone and low 04 zone is the ETH BTC target on the daily. So for me, that's when I switch back to BTC maxi mode or Sol hot sauce mode, right? Just out of ETH, just not important to me at that point because of the relative value mean reversion play. Most of that juice has been squeezed, most likely. We'll see what it looks like when it gets there, if it gets there. But just something to keep in mind. And here's Sol ETH. I knew it was getting close because 14 red days in a row is just unusual. We'll see if this lasts on its own little mean reversion. It did have a 12-hour div, I guess, and the 4-hour div, like I mentioned yesterday, was sort of continuous. Now it can bounce and fail. It can go to 05, 06 and fail. It's just the verticality of ETH right now that's scaring me a little bit, right? Just on a relative value basis. It's gone from 0 to 100 in like a week. Great. It can still go to 4. It can go to 8. It can go to 50, whatever. I don't care. But in the meantime, near term, I think there's going to be some decent trading opportunities around the edges. I can't remember if I threw up an Aptos chart somewhere up here. But Aptos, of all of the layer ones, of all of the higher market cap coins, that was one of the better looking charts that is pre-breakout on the cloud. Here we go. And it's a relative value conversation. Everything else, if 4,000 out of the 5,000 existing cryptocurrencies have broken higher and the hot ball of money is rotating around, at some point it's going to get to this and potentially go higher, right? That's all I'm saying. You could say the same thing for any of the meme coins. You could say the same thing for anything. If it's not up 30 to 50% and everything else is, money finds a way. Money finds a way into stuff like this. So I do like where this is on the cloud in a vacuum and then on a relative value basis according to everything else. All right, now the fun begins. It's going to start with crypto. There's some quantum stuff, some AI stuff, some highly speculative stuff, natural resources, energy, the full gamut. This is all from the stream on Thursday again. For Galaxy, some people were wondering why their chart wasn't loading. So this is specifically for TSX, which is the Toronto Stock Exchange. They recently listed on the NASDAQ as well. I'm just going to trade this using the TSX chart and then take profit based on whatever the NASDAQ price is. But this is where you'd want it to go based on this chart. And is there some FX volatility here that I should think about? I mean, probably, but I just don't care. It's not going to really matter. What's going to matter more is what is on the balance sheet for Galaxy. Do they have ETH? Do they have Sol? Are they staking? I don't really know all the details exactly, but that's going to matter way more than USD CAD volatility. There were also questions about whether or not this is a cup and handle on the weekly. Sure, right? Let's break out to 41 first and see what happens in the 40s, 60s, 70s before we talk about 400. But yeah, is it worth maybe holding a little bit beyond 47 just in case? Probably, but it depends. How quickly do we get there? Does it happen in Q4? There's a world where all of this stuff just goes bananas in Q4, and that's it. We're done, right? Now, it depends. Whatever the price is, but if we get between 200 and 400 on Galaxy in Q4, because it's a crypto company, because they have crypto on the balance sheet, and that's just where the market is at the moment, then yeah, I think that's a great level to sell some if you're holding from 25, right? Another company from the TSX, Neptune, never heard of it, still setting up. And I'd put these charts into 3 categories, either post-breakout, pre-breakout, or just probably leave alone. This one would be pre-breakout. I want everything to make a higher high. I want everything above the cloud. I want everything to complete its pattern, whatever that pattern may be. In this case, you could argue inverted head and shoulders or something. So it's a little early relative to Galaxy. CleanSpark, pre-breakout. Does this get a right shoulder yet to be formed into Q4? I would want this to go way higher than 25. The problem is 25 had a ton of volume in this area. So if I'm holding or trading miners at this point, I want crazy outsized returns, 5x, 2.5x, something that makes it worth it. So if your target's 25 here, yeah, I could see that. That should be a lot easier than 75. But the question is it worth it relative to something else? That's the question. You could probably measure this, I guess you kind of did here, as a falling wedge that is working its way through the cloud. So I still like it if you're bullish BTC for the rest of the year. Riot's another one. If you want something with leverage or juice for whatever reason, maybe the miners move, maybe they don't. But I would want this to go to 40 plus. I'm just measuring the fibs here, the high, the low of this channel, projecting it higher. This is in the post-breakout category, but early stages. So I think there's plenty of room on that one if you're bullish on miners in general. And then there's Bitfarms. I bought some of this today, $300 to $500 at a Bitfarm call just to see what happens here. Now, do I want this to go from 1 to 2? Sure, but I want this to go way higher, right? I'd say it's pre-breakout, but the chart pattern looks pretty good. Pre-cloud breakout. And similar to the Aptos idea, if IREN is at infinity and CoreWeave is at infinity and everything else is at infinity, people are going to start looking around, regardless of the quality of this company or what they're holding on their balance sheet. And they're just going to say, okay, this one's cheap in the group, in the sector. And that should be enough to start some momentum for stuff like this. I mean, today I think it was up 12% or something, and it hasn't even broken out yet. Another one on the crypto side, just randomly pre-breakout. This is like most of the stuff that people have sent me because they know what I like, but it doesn't really matter what it is. I know nothing about this token. Pre-breakout, I like it above 370. And you can sort of see shades of all of the meme coins on this, MSTU, right? The charts look similar. Huge drawdown, recovery, bleed, and back into potential breakout territory. On the financials here, this is CFG, and it depends on how long you've been holding this, but if it were me and I was holding since the breakout at 40, 42, I certainly wouldn't be buying more here. I'd be setting sells for the 50 to 55 range and moving on to something else. But it's been a great trade. Looks great. Looks like continuation. Looks fine for the moment. And there's also ARK-F, which is the ARK FinTech ETF. This is blown past the initial inverted head and shoulders breakout target. And it's good to see both sides of this to say, okay, this was, this is like IWM before the target or IVZ before the target. And then this is what happens if you get this bonus kicker well beyond the target, the measured move. So if this continues 60 to 70, but you do have early signs of a TKC clamp here. So I would definitely set an intelligent trailing stop loss on that. Not a close today in my book, but you just got to be careful because this goes with ETH, this goes with anything that's up in this like parabolic fashion. It has a lot to give back, and you just want to be mindful on where the breakpoints are. Whether or not you want to eat that to the downside back down to 46 from 54, some people would. Some people would say, no, I'd rather trim at 52 and think about a rebuy at 46. Just depends on your style, but it's certainly pretty parabolic. Unity Software, post-breakout, similar to CFG, inverted head and shoulders above the cloud. Getting there, getting to its level, looks great, looks fine. Really nothing to say. It just needs more time. Sweet Green, this is probably one of the better charts just because of the pattern. Multi-month tight, low, inverted head and shoulders, cloud will start to like it on the breakout. And this is really why I do streams at all. I'm looking for, crowdsourcing ideas, right? So I would have never pulled this up on my own, but a very interesting little chart that I set some alerts at 1410 or something. Because whenever the market is kind of exploding like it is now, people are always thinking about the next thing, the next thing, the next thing. So it's always good to have a few ideas in the back pocket, just in case, you're rotating out of ETH. Maybe you want a little less crypto on your book. Maybe you want something else. And it's always good to have some ideas ready to go. Toast looks ready to go. Just broke out today, yesterday, the day before. Plenty of room for the upside. And I don't know if this is statistically true, but I feel like anecdotally, when you see a rising inverted head and shoulders like this, these tend to break higher more often than otherwise. I'd have to look into that, but chart looks really good. Cloud loves it. Looks good to go. Grabs another one. Bought some of this on Friday. Cloud likes it. Pattern looks great. Plenty of room left on the upside there. GME is pretty much on my do not trade list, so there's just other stuff to do. Maybe once every 4 years there's a trade here, but I don't really see that at the moment. The 3 day's a mess. The daily's a mess. Yeah, there's a gap on the daily, but who cares, right? Like there's so many other things to be trading here. It just doesn't make sense to me personally to be fooling around with anything GME related. So if this looked better on the chart, I don't know, above 35 or something, maybe, but it just looks like slop and chop here to me. Open, this one was up, I don't even know, 90% today. It was up probably something ridiculous on Friday. Clearly some sort of Wall Street bets, short squeeze situation. Not for me. I'd rather just trade something else. But if you are watching the short squeeze list, you probably want to watch that on a slightly lower time frame. Maybe the 4 hour, maybe the 6 hour, just to give you a better heads up on something like this. Because, the trade kind of happened. It's already done, per se. There's probably going to be a lot of back and forth at this level. It's just, people see this and they're like, oh, this can go to 10, this can go to 40, this can go to 50. Like, yeah, it could. Okay, sure. Right, what do I know? But it's just not for me. I'd rather wait and see what happens here and then reevaluate maybe in Q4 when the entire market might start to lift off. iRobot, this one would be do not touch for me. Far below the cloud, high time frame. Needs a ton of time. And this is where we start to get into the robotics section of the charts today. Serve robotics, also really nothing, right? Nothing to do here. Needs to make a higher high, needs to be above the cloud, something. It had a great pattern down here, but at this point, I don't really see much of anything on that one. Kit, this one I pulled up and audibly laughed just because it's been basically dead for so long. And this is like GME, if we had the 2020 pre-2020 chart for GME, that's kind of what it looked like, where it was just dying for years. So is it worth setting an alert? I think so. Set an alert at 125 or something and go about your life. It looks like it's getting closer, but again, if we think Q4 is going to be just insanity, it's stuff like this that you just want to have on your back pocket again, just in case there's a trade here, there's a setup here. Similar to the Bitfarms idea, just in case this stuff breaks out. But I don't really see a trade here at the moment. It's been dead. It's an altcoin, right? It's been dead for over a year at this point. Had some excitement with everything else, which is a great sign for Q4 this year, if we can get some bullishness. But I don't really see anything on that just yet. SMCI is another one, bullish Kumo twist today. I'm probably not going to take a trade on this, but interesting. It's been super sloppy, choppy, bit of a rounded bottom here. Good things happen above the cloud. So that's all I'll say on that one. NBIS, cup and handle, pre-breakout, probably on some meme list somewhere. AI. But it looks good. Chart pattern is a chart pattern. Can't knock it. Anything above 55 on that one. And it's go time. And there's plenty of room higher on the measured move. Pony AI. Another one I pulled up and laughed. It is quite a mess here. We're talking like outside of TA at this point. We're just talking speculative. You'd want this into the 20s first, but if you're buying here, you're expecting this to move to a 10x. It's just fine, right? Maybe we have some of our portfolio NFA in stuff like this where you're hoping to hit a 10x and it's a gamble. But when I throw all of my money at this, absolutely not. This is a horrific chart. And we're going to look back on this in a year and it's going to be at 1,000 and people are going to say, I told you so. I told you that was going to 1,000. QSI, Another one that just needs more time, nothing to do here, below the cloud. Similar to the robotics company we just looked at, clearly it had a very exciting Q4 and died. So, there's nothing TA-wise that's going to pull you into a trade here. Now we get into the biotech and medical devices territory. NTLA doesn't look too bad, honestly, just because it's been deeply down for a long time. And it's starting to pull up into the cloud. Bullish TK cross pending. Bullish break back into the cloud for the first time in, since 2021? So I don't necessarily know what you do with this here, but now's a better time than at any point in the prior 4 years to try to take a long on that one. Oscar Health, another meme Wall Street Bets company, I think. Back here, if we would have pulled this up in 2023, I would have said, wow, that's a great looking inverted head and shoulders. It's a multi-shouldered inverted head and shoulders with a neckline at 8. That broke out. Then it had a head and shoulders, broke down a little bit, tried to bottom. It's a giant mess here. Nothing for me whatsoever. I'd leave this one alone personally. I know it's on everybody's watch list though. RXRX breaking into the cloud here. Mean reversion. Giant mess generally. But, if you caught this from 5 or whatever, I think you're doing great. Ready to go to 8. I just don't know if there's anything for anybody at this point on this chart. Something to watch into Q4. CRMD chart looks horrific. Just gross chop all over the place. The cloud doesn't even know how to read this, but not trending in any way that I want to touch this. Ugly down days, ugly down volatility. Now, if it looked like this, where it's pre-breakout, great. This is the opposite of that. Does not look good. And this one's similar to, RXRX? Bottoming pattern into the cloud. Nothing that anybody's going to love here, but something maybe to watch later on in the year if you're on this biotech kick. As rates come down, maybe biotech does better. There's some interesting ones to look at. Here's another one, DCTH, similar to that CRMD chart. Just, I don't see anything here. Double top, bearishness below the cloud. Just gave everything back since May. Not where you want to be. There's a lot of charts that are working right now, pre-breakout. This is not one of them. I don't like anything that looks like this. Now on to the mining metals, natural resources section. REMX looks great still. Rare earth, strategic metals, ETF, ultra high time frame, cloud breakout. Hasn't looked this good in years. So this to me is like at the top of the list of things that I'd rather buy than most of these charts, especially if they're not ready to break out. HIO, which I assume is natural resources, metals, just looks like death as well. You can just see, it's gone nowhere since 2022 and not quite above the cloud yet. So that one's a no from me, dog, at 2 cents. MIN, however, looks excellent. Great looking multi-month head and shoulders breakout above the cloud. Cloud loves it for the first time in several months. So this is where I'd spend my attention and my time. I would not think about this probably ever again. It's not a chart that has had a history of success kind of ever. Just looks awful. Albemarle Corporation, another one in a pre-breakout stance in this bearish channel. Messy cloud. Anything above 80, and it probably is good to go. There's clearly, there's AI, there's natural resources, uranium, energy, utilities. Like that's where the market is right now, commodities. So anything that looks decently okay probably starts to see some action. So maybe set an alert, come back to it in a week and see what's going on. But looks a little early on that one. LODE, Comstock Inc. You got a fresh daily breakout on the cloud. I think this is coal, but I'm not exactly sure. Doesn't look horrible. It's just the volatility here that scares me. Look at this up down in January, straight up, straight down. But you can't argue with the cloud. So higher on the list than most things we've looked at, but probably not for me still, just because it's coal. Now onto energy. This is XLE. It's always good to take a look at the bigger ETFs just to see, like, do these look like anything? Have they done anything? XLE's just been a stinker for a few years now. Looks like it wants to break out, but every time it tries to break out, it just gets smacked down. So if you can find stuff outside of that looks better, then maybe that's things that you would like. EOS Energy looks okay. I like XLU better. I like Oklo better. So probably not for me, but the cloud gives it its blessing. So maybe I'm just being too bearish on that one. And then the last one here, TE, must have looked at this in 2024 at some point because we had this drawn out on the chart, but also has another inverted head and shoulders ready to break out of the cloud. So there's plenty of stuff here that isn't the SPY, that isn't the Qs, that's looking interesting. And I think Sweet Green might be the chart of the day for me. That and Bitfarms, but even Riot looks decent. Great looking setup here. I think the last time I saw a setup like this was on Snowflake, and it broke up after hours and then broke all the way down on earnings. So just something to keep in mind, but that is an excellent looking chart in my book. That's all I got for this one. Give me a like, dislike, comment, share, subscribe, and happy trading.